Hey everyone, welcome back. We're going to be taking a deep dive into a tax strategy today,
Yeah.
and it's one that could be a real game changer when it comes to saving some money.
Yeah.
Combines gifting and this thing called the Step Up in Basis.
Right.
We're going to be looking at an article called How a Step Up in Basis Can Be a Tax Dream Part 3
Okay.
from Skuloff Financial Group.
Interesting.
And get ready because this one might have you rethinking your whole financial plan.
Yeah, this is a strategy that I think a lot of people overlook,
Yeah.
but it can be incredibly powerful, especially for those looking to minimize taxes on assets
Right.
that have really gained a lot of value over time.
So let's break it down.
Okay.
Imagine you have a piece of property,
Okay.
like, say, a beautiful beachfront cottage
Hmm.
that's been in your family for years.
Right.
You inherited it from your grandparents who bought it way back in the 70s
Okay.
for it's still like $50,000.
Wow.
Now that same cottage is worth like $2 million. That's amazing appreciation.
Yeah.
But here's the catch.
Yeah.
If you decide to sell it, you're going to be hit with this massive capital gains tax
Exactly.
outright.
Yeah, that's where the step up in basis comes in.
Okay.
It's essentially this rule that adjusts the value of an asset when it's inherited.
Okay.
So instead of being taxed on the entire profit from your grandparents' original price
Right.
all the way to today's market value, the basis is stepped up.
Okay.
The value at the time of inheritance.
So in the case of our beachfront cottage, if I were to inherit it
Mm-hmm.
and sell it right away, I wouldn't have to pay capital gains tax on that huge difference
Right.
between $50,000 and $2 million.
That's the idea.
Wow.
Yeah, it's like the slate's wiped clean and you're starting fresh with the asset's value for tax purposes.
Okay.
This can be a huge benefit when it comes to preserving wealth
Right.
across generations.
Okay, now that's a serious tax dream.
It is.
But how does gifting fit into this whole picture?
Well, that's where things get really interesting.
Okay.
Instead of waiting to inherit an asset, this strategy involves gifting it to someone,
Right.
typically an older family member like a parent.
Okay,
And now, stick with me here.
I'm with you.
The parent doesn't sell the asset.
Yeah.
They hold on to it. Then when they pass away, you inherit it from them. Because of the step up in basis, your cost basis for the asset
Right.
is reset to its value at the time you inherited it from your parent.
Hold on. So you're saying if I were to gift that beachfront cottage to my mom
Right.
and then inherit it back from her,
Right.
the capital gains tax I'd have to pay would be significantly less.
Potentially none, depending on market fluctuations, of course.
Okay.
Yeah, you see, your cost basis would be stepped up not to your grandparents' original purchase price,
Right.
but to the market value when you inherited it from your mom.
Wow. I think I'm starting to get this.
Good.
But wouldn't gifting an asset like that trigger a gift tax?
Ah, that's a great question.
Yeah.
And it's definitely something to be aware of.
Okay.
There are annual gift tax exclusions, right, and lifetime exemptions. Let's break that down a little bit further.
Okay.
The annual gift tax exclusion is the amount of money you can give to someone each year without having to pay any gift tax.
Hmm.
For 2024, that amount is $18,000 per recipient.
Okay.
So you could technically give $18,000 to as many people as you like
Wow.
without incurring any gift tax.
Okay.
Now, the lifetime exemption is a much larger amount,
Okay.
over $13 million for 2024.
Wow.
And it represents the total amount of gifts you can give throughout your lifetime before any gift tax is due.
So there's a good chance that someone could gift an asset like our beachfront cottage
Right.
without triggering a gift tax because of these exclusions and exemptions.
It's possible, but again, everyone's situation is different.
Right.
And it's crucial to consult with a tax professional to make sure you're
Okay.
within those limits and to understand any potential implications.
Okay, so let's say gift tax isn't an issue.
Yeah.
Are there any other potential downsides
Yeah.
or risks associated with this strategy? After all, it sounds almost too good to be true.
You're absolutely right to be thinking about potential downsides.
Yeah.
Like, with any financial strategy, there are always things to consider.
Right.
One of the biggest risks with this approach is that we can't predict the future.
Okay. I could see that.
Yeah.
I mean, we're basing this whole strategy on the assumption that the person receiving the gift,
Right.
let's say our mom in the beach cottage
Yeah.
example,
Yes.
will hold on to the asset for a while, right?
Precisely. The longer they hold the asset, the more potential there is for it to appreciate in value
Right.
and maximize the benefits of that step up in basis
Yeah.
when you eventually inherit it. But what if something unexpected happens
Yeah.
and they pass away sooner than anticipated?
That would definitely throw a wrench in things. Would the step up in basis still apply?
Absolutely. The step-up still
I
happens,
was like,
but
good.
the shorter the time frame between the gift and inheritance,
Right.
the less opportunity there is for the asset to increase in value.
Yeah.
So the potential tax savings might not be as significant.
So timing is a key factor here.
Yes.
It's not just about passing on an asset,
Yes.
but about strategically planning for that transfer to maximize the tax benefits.
Exactly. And there's another layer of risk to consider here.
Okay.
What happens if the value of the asset actually goes down while the person is holding it?
Mm-hmm.
Remember, the step up in basis is based on the market value
Right.
at the time of inheritance.
Oh, I see where you're going with this.
Yeah,
If the market takes a dip
right.
and that beachfront cottage suddenly isn't worth as much,
Yeah,
I could end up inheriting an asset that's actually worth less than what it was originally gifted for.
exactly. Instead of avoiding a big capital gains tax bill,
Yeah.
you might end up inheriting an asset that's lost value.
Yeah.
It's not exactly a tax stream scenario.
Definitely not.
Yeah.
So it seems like there's a bit of a gamble involved with this strategy.
Yeah.
You're essentially betting on the future performance of the asset
Yes.
and hoping that it continues to appreciate in value.
There is definitely an element of uncertainty. But remember, that's true with any investment strategy.
Right.
The key is to weigh those risks carefully against the potential rewards.
All right. So we've talked about the importance of timing
Mm-hmm.
and the potential for market fluctuations.
Yes.
Are there any other things we should be considering when evaluating this strategy?
Well, beyond those financial risks, there's also the emotional side of things.
Okay.
Gifting a significant asset, especially one with sentimental value, like a family home, can be a big decision,
Yeah.
both for the person giving the gift and the person receiving it.
I can imagine that leading to some complicated family dynamics.
It's essential to have open and honest conversations with everyone involved.
Right.
Make sure everyone understands the potential implications of the gift, both financially and emotionally.
Okay.
It's not just about the numbers, it's about family relationships
Right.
and making sure everyone is on the same page.
So communication is key. Don't just spring this strategy on your family members out of the blue. Make sure you're all working together and comfortable with the decision.
Absolutely. These kinds of financial decisions can have a ripple effect on family dynamics.
Yeah.
So it's crucial to approach them with sensitivity and transparency.
Okay, so we've talked about the potential risks and the emotional considerations, but before we move on, I'm curious about something. The article we're using for this deep dive
Okay.
presents 3 different scenarios to illustrate the potential tax savings.
Right.
Can we walk through those? I think it might help our listeners really grasp the numbers involved.
Of course. I think looking at specific examples can really drive the point home.
Okay.
The article uses a hypothetical investment portfolio worth $2,100,000
Okay.
with a very low original cost basis of $100,000.
So if the owner of that portfolio decided to sell it themselves, how much would they be looking at in capital gains tax?
Well, if they were in a high tax bracket, let's say a 20% capital gains rate,
Okay.
they would be on the hook for a whopping $400,000 in capital gains tax, plus an additional $76,000 in net investment income tax,
Okay.
which applies to certain types of investment income.
Wow, that's almost $500,000 going straight to taxes.
Yeah.
Definitely not the kind of tax stream we're aiming for.
No.
What if they were in a lower tax bracket?
Even if they managed to get their capital gains rate down to 15%,
Oh.
they'd still be facing $300,000 in capital gains tax,
Okay.
plus that same $76,000 in net investment income tax. So even with a lower tax rate, that's
Yeah.
a significant chunk of change.
Yeah.
$376,000 in total.
So it seems like even with careful planning and lower tax rates, selling a highly appreciated asset can still lead to a substantial tax bill.
Yes.
Now let's compare that to the gifting and step up in basis scenario. What happens there?
In that scenario, the potential capital gains tax liability practically vanishes.
Okay.
Remember, because of the step up in basis,
Right.
the inheritor's cost basis for the asset is reset to the market value at the time of inheritance. So in our example, that $2,100,000 portfolio
Okay.
would essentially have a fresh start from a tax perspective.
So potentially zero capital gains tax.
Potentially.
That's a pretty incredible difference. It really highlights how powerful this strategy can be in terms of minimizing taxes and preserving wealth.
It's a game changer for sure. But it's important to remember that this is just one hypothetical scenario.
Right.
Everyone's situation is unique, and there are countless variations on how this strategy can be applied.
Okay, so before we dive into any more examples or variations,
Okay.
let's recap what we've covered so far. We've talked about the step up in basis,
Mm-hmm.
how gifting fits into the strategy,
Right.
the potential risks and
Yes.
downsides,
Yes.
and the importance of open communication with family members.
And we've also seen how this strategy can play out in a real-world scenario,
Right.
potentially saving someone hundreds of thousands of dollars in taxes.
Exactly. But before anyone rushes out to start gifting their assets, it's absolutely crucial to seek professional guidance.
I agree.
This strategy isn't something you want to try to DIY.
I couldn't agree more. A qualified financial advisor can help you navigate the complexities,
Right.
assess your specific situation, and determine if this approach aligns with your overall financial goals and values. They can also help you understand any potential tax implications and make sure you're in compliance with all applicable laws and regulations.
It's like having a financial coach in your corner, guiding you through the process
Yeah.
and making sure you're making the best decisions for your unique circumstances.
Exactly.
But are there any situations where this gifting and step up in basis strategy might be particularly advantageous?
Absolutely. Think about assets that tend to appreciate significantly over time. Things like stocks or bonds or even valuable collectibles. Let's say you've got a stock portfolio that you inherited from your parents years ago. It was worth a modest amount back then. But now, thanks to years of growth, it's valued at a substantial sum.
Okay, I'm following you.
Good.
So if I were to sell that stock portfolio today,
Hmm.
I'd be facing a hefty capital gains tax bill
Right.
based on the difference between its current value and that much lower original cost basis.
Exactly. But if you were to gift that portfolio to your elderly parent
Okay.
and they held on to it when they
Right.
pass away,
Hmm.
you would inherit it with a step up in basis.
Okay.
Your cost basis would be adjusted to the value at the time of inheritance,
Right.
potentially saving you a significant amount in capital gains tax
Right.
if you decided to sell it later on.
So it's not just about real estate.
Right.
This strategy could be applied to a wide range of assets,
Yeah,
as long as there's the potential for significant appreciation.
that's right. It's about thinking strategically about your assets
Yeah.
and how you can potentially minimize your tax burden,
Right.
both for yourself and for your heirs.
It sounds like this gifting and step up in basis strategy could be a really valuable tool for people who are thinking about estate planning
Absolutely.
and how to pass on their wealth to the next generation.
It's a way to potentially reduce the tax burden on your beneficiaries
Right.
and ensure that more of your hard-earned wealth stays within your family.
Okay.
Of course, it's essential to work with an estate planning attorney to make sure this strategy aligns with your overall estate plan and that all the necessary legal documents are in place.
It sounds like we've covered a lot of ground today.
Or we
I've explored the ins and outs of the gifting and step up in basis strategy, talked about the potential benefits and risks,
Yeah,
and even looked at some real-world examples of how it could be applied.
I think so.
Before we wrap up, I'd like to leave our listeners with something to think about.
Okay. I always appreciate a good takeaway.
Yeah.
What's on your mind?
We've been discussing a very specific tax strategy today,
Right.
but I think there's a broader lesson here. It's about being proactive and informed when it comes to your finances.
I couldn't agree more. It's so easy to get caught up in the day-to-day
Yeah.
of managing our money that we sometimes forget to step back and look at the bigger picture.
Exactly. Taking the time to educate yourself about different financial strategies,
Right.
whether it's this step up in basis strategy or something else entirely, can make a huge difference in your long-term financial well-being.
Absolutely.
And don't be afraid to reach out to qualified professionals for guidance.
Yeah.
Financial advisors, tax professionals, estate planning attorneys.
Right.
They're all there to help you navigate the complexities and make informed decisions.
It's like having a team of financial experts in your corner,
Yeah,
helping you achieve your goals and make the most of your hard-earned money.
well said. Thanks for joining us on this deep dive.
You're welcome.
I hope you found it informative and insightful. Until next time,
Yeah.
keep learning, keep exploring, and keep striving to make your financial dreams a reality.
Absolutely.